All right, and broadly looking at some macro trends, what do you think boards are worried about right now? Is it the incoming Trump presidency and the impact on Australia's economy?
Yeah, look, I think there's three key themes that people need to be focused on right now. Clearly North America and Trump. And I think that the Trump sort of situation is probably, the thing I'm probably most cautious or concerned about is how the inflation environment is actually sort of built on the back of that. You're going to have, increased spending, but you're going to have tariffs, for example, on China and Mexico. You're going to have a lot of upward pressure on pricing. And we've already seen a flattening of the yield curve in expectation of that. So that's the first thing to be cautious on. Then you've got the European markets or the European countries, geopolitical tensions extending into the Middle East. That's going to continue to be a little bit of a messy situation. And Europe sort of has failed to deliver fully over the past few years. So we're going to have to continue to watch that. And then finally, the big one to affect Australia will be China. China clearly has been going through some structural issues, dealing with high saving rates, property market issues. And even though China has sort of muddled its way through this at the moment and people want really large stimulus, I think they're actually doing the right thing at the moment, and that's reflecting in some of the underlying macro data. And I think that'll end up being really quite positive for Australia on a medium to longer term. So in terms of the overall impact on Oz, really what we need to see now is earnings catching up to those share price movements, which has been really aggressive, and that'll be the focus over the next month and into reporting season.
Yeah, well, you mentioned share price movements. The stock market is basically at all-time record highs right now. I mean, there seems to be a lot of positivity, at least from investors.
Yeah. I mean, look, the US has been strong, Australia's been strong. Key difference, US has seen the earnings upgrades to follow. Australia hasn't quite seen that. So we've actually got to start seeing some earnings momentum come through. That sort of isn't right now. And I think, you're seeing with AGM commentary, there's been a few downgrades. Today we had a couple. Lavisa came out with slightly soft. You've already mentioned WiseTech. These companies and the market in general is primed to needing to deliver. If it doesn't deliver, you're going to see a compression of that multiple. It's currently expanded to about 22, 23 times, probably historical averages taking COVID into account, 18, 19. So that's a good indication for you to say that, hey, you better deliver here or meet expectation, or you're going to be, really punished.
You mentioned the yield curve. A lot of major bank economists thought rates would be cut in February. They're now pushing them back to May. Could there be a potential repricing of where the interest rates in Australia finally end up, being a bit higher than what the market thought?
Look, I mean, it's a really good point. And I'm even starting to think, has Australia missed the interest rate cuts altogether?
Yeah.
So you might have a situation in the US where you've had a couple of cuts, you might have one or two more. You might see inflation start to rear its head in the middle of next year or the back of next year. Australia's had this stubborn sort of, inflation in construction and services. You might see a scenario where we don't just push into, expectations for the middle of next year. You might see it pushing into the back of next year. And if that coincides with potential Fed rate increases, we may miss out altogether. Now, my view is the economy here is actually starting to show a few signs of weakness. I think the consumer's starting to roll a little bit. So, and I think particularly the housing market, depending on the category, there is some weakness coming through. So I'm sort of, crossing my fingers and hoping we do get a rate cut in the middle of the year, but I think it's looking at like the back of the year at the very best.
Andrew Dale from ECP Asset Management. Thanks for your time.
Thank you.